Felix here, and today we're diving into why I'm buying the Tesla dip after the recent earnings shock. Buckle up because we've got a lot to cover here. Let's dive into Tesla's recent earnings report from yesterday and why I believe it presents a golden opportunity for savvy investors. The headlines might seem grim at first glance. Tesla's Q2 earnings showed disappointing results with revenues falling short of expectations, but the stock did take a hit in after-hours trading. But here is where it gets interesting. I'll reveal to you why these short-term setbacks could lead to massive long-term gains. So you won't want to miss this. Stick around. Now let's break down what really happened here. Wall Street, in its infinite wisdom, still sees Tesla primarily as a car company. But that's kind of like viewing Amazon as an online bookstore in 1999. They're missing the forest for the trees. Tesla isn't just about electric vehicles anymore. They're building the future of transportation, energy, and AI. Let's look at each of these areas in detail. Before we dive really into that, I want to share something fairly incredible with you. Winston, my golden retriever's teaching portfolio, is up over 80% this year. That's a $24,000 gain on a $30,000 portfolio. And if you're wondering how we achieved those results, well, we're going to host an exclusive webinar where Winston will break down our 3 simple trading strategies for you, completely free of charge. All you got to do is grab yourself a seat at felixfriends.org/webinar and learn. Okay, point number 1, robo-taxis. Tesla is on the cusp of revolutionizing urban transportation. Imagine a fleet of self-driving taxis available 24/7, safer than human drivers and more cost-effective than traditional ride-sharing services like Uber and Lyft. The potential market is enormous. So let's crunch some of those numbers here. The global taxi market is expected to reach $120 billion by 2027. Imagine Tesla capturing even just a 20% of that market with their robotaxis. That's a $24 billion opportunity, and that's just the beginning. But it's not just about the money. Think about the actual impact of that. Less accidents, less congestion, improved mobility for everybody. The ripple effects are quite staggering. Then we have Optimus, Tesla's humanoid robot project, which might still sound like science fiction, but it is rapidly becoming real. Elon Musk believes Optimus could eventually be more valuable than Tesla's entire car business. Think about the implications for manufacturing, healthcare, home assistance. And the global robotics market is projected to reach $210 billion by 2025. Yeah, next year. So if Tesla can capture even a small portion of this market with Optimus, we're talking about billions in potential revenue rather sooner than later. But let's think bigger. What if Optimus could revolutionize, say, elderly care or disaster response? The potential applications are limitless. Then we have the energy business. Tesla's energy storage solutions are growing at an unprecedented rate. In Q2, they deployed a staggering 9.4 gigawatt hours of energy storage. That's more than double the same quarter last year. To put this in perspective, 9.4 gigawatt hours is enough to power over 300,000 homes for a day. That is just the beginning. As the world transitions to more renewable energy, the demand for energy storage will moon. And the global energy storage market is expected to grow to $546 billion by 2035. Tesla is positioning itself to be a major player in this space. Let's look at AI and full self-driving, FSD. Tesla's AI capabilities are leaps and bounds ahead of the competition. They're not just building better cars, they're creating the brain that will power the future of autonomous vehicles. Tesla has over 1 million vehicles on the road collecting data for the AI systems. This gives them an unsurmountable lead in real-world training data. It's like having 1 million research assistants work 24/7. And the autonomous vehicle market is projected to reach $556 billion by 2026. That's every 2 years away. Tesla is poised to capture a significant portion of this market. Now let's address the elephant in the room, the earnings miss. Yes, Tesla's revenues fell short of expectations, but here is why I'm not worried. Temporary headwinds. Well, the global economy is facing challenges and the auto industry isn't immune. But Tesla's fundamentals remain strong. They delivered over 466,000 vehicles in Q2, a 10% increase from the previous quarter. Tesla has also been reducing prices to drive demand. While this impacts short-term margins, it's expanding the market share and it's crushing the competition. It's a classic move from the playbook of disruptive companies with lots of cash. Remember when Amazon was criticized for prioritizing growth over profits? Look at where they are now. Tesla is playing the long game, and I believe it'll pay off handsomely. We look at the future products. Tesla confirmed that plans for new, more affordable vehicles are on track for production in the first half of 2025. This will open up entirely new market segments for Tesla. Imagine a Tesla priced at $25,000. It completely disrupts the auto industry, and the potential market expansion is enormous. Companies like Ford and GM would never be able to make a car at that price point, so they just can't compete, especially if you take away the EV subsidies, as Trump is indicating he might do if he wins. Tesla is also investing heavily in AI, including a massive expansion of their GPU cluster. This might hurt short-term profits, but it's setting the stage for future dominance. So coming up, I'll reveal the hidden gem in Tesla's earnings report that most analysts missed, so stay tuned. Now let's talk about Tesla's energy business here. This division is growing at a breakneck pace, with revenues doubling from last year, yet most analysts barely mention it. This could be Tesla's secret weapon in the years to come, the Megapack. Tesla's utility-scale battery system is seeing an unprecedented demand. Utilities around the world are realizing that battery storage is crucial for the transition to renewable energy. During my time as a corporate wage slave, I worked on several deals in the energy sector, and I saw firsthand how slow and resistant to change traditional utilities were. Tesla is disrupting this industry, and the incumbents are struggling to keep up. All right, here's that bombshell that many missed. Tesla's product outlook section. They reaffirmed plans for cheaper cars coming in the first half of 2025. But more importantly, they hinted at a revolutionary unboxed manufacturing strategy for their robotaxi product. This could be a game changer, potentially allowing Tesla to scale production faster and more efficiently than anybody thought possible. It's reminiscent of Henry Ford's revolutionary assembly line, but for the 21st century. Now, I know what you're thinking. Felix, this all sounds great, but what about the competition? What about the risks? Fair question, and I'm glad you are thinking that. Let's address them. Competition. Yes, other automakers are entering the EV market, but Tesla's tech lead, especially in software and AI, is formidable. They're playing chess while others are learning checkers. Let's look at some numbers. In the US, Tesla holds about a 65% EV market share. Their closest competitor, Ford, has only about 8% and is just, quite frankly, struggling. Do we have regulatory risk? Yeah, there are always regulatory hurdles with new technology, but Tesla's data advantage in autonomous driving is unmatched, which should help them navigate these challenges. Tesla has over 35 billion miles of real-world driving data. Their closest competitor, Waymo, has only about 20 million miles. And yes, I'm not mixing up the millions and the billions like a certain president we shan't mention. This data is crucial for developing and proving the safety of autonomous systems. Tesla has ambitious plans, but they've shown time and time again that they can execute on seemingly impossible goals. Remember when everyone said they couldn't mass produce the Model 3? Or when they said Cybertruck was unbuildable? Tesla has consistently proven the naysayers wrong. So why am I buying this dip? Because I believe the market is fundamentally misunderstanding Tesla's potential. They're not just a car company, they're an energy company, an AI company, and a robotics company all rolled into one. The current price represents, in my humble opinion, this is not financial advice, a fantastic entry point for long-term investors who understand Tesla's true potential and don't mind the ups and downs of 30, 40, 50, 60, or even 70%. So let's do some back of the envelope calculations here. Automotive. Assuming Tesla reaches 20 million vehicles per year by 2030, which is Elon's goal, at an average selling price of $30,000. That's $600 billion in annual revenue. Energy. If Tesla captures 10% of the projected $546 billion energy storage market by 2035, that's another $54 billion in annual revenue. Robotaxis. If Tesla captures 20% of the projected $120 billion taxi market by 2027, that's $24 billion in annual revenue. And in my humble opinion, the taxi market is going to massively grow once they drive themselves, because it'll be far more affordable to take a taxi because you won't have to pay for the driver and you can get more people in and everything else. Now, Optimus. If Tesla captures just 5% of the projected $210 billion robotics market by next year, that's another $10.5 billion in annual revenue. Adding these up, we're looking at a potential annual revenue of nearly $700 billion by 2035. And I think a lot of that revenue could come in much sooner. And this doesn't even account for potential breakthroughs in AI or other unforeseen innovations. And I think it's hard to imagine that Elon isn't going to come up with a new idea in the next 10 years. So in our final segment, I'll share my price targets for Tesla over the next 5 years with you. You might want to sit down for this one. Before we wrap up, let's recap the key points here. Tesla's earnings miss is a short-term setback in a long-term growth story. Wall Street is underestimating Tesla's potential in robotaxis, AI, and energy. And new, more affordable models are on the horizon, expanding Tesla's market. The energy business is growing rapidly and could be a major profit driver. Tesla's AI investments position them for future dominance. Now for my price target. Based on my analysis of Tesla's multiple revenue streams and growth potential, I believe Tesla could reach over 10x from current levels. It might sound outrageous, but remember, people thought Amazon was overvalued at $100 per share. Let's break down how we get to this number. Assuming Tesla achieves $700 billion in annual revenue by, say, 2030, with a conservative profit margin of 15%, that's $105 billion in annual profit. Applying a PE ratio of 30, lower than Tesla's current ratio, we get a market cap of $3.15 trillion. And you might be thinking, you're not going to get a company that big. Well, you know what happened to the Magnificent Seven over the last 8 years? They went up like, what, 8 times, 10 times, something like that, right? So dividing the current number of outstanding shares then, which is about 3.2 billion, by the market cap, or the other way around rather, we arrive at a share price of $984. But remember, in my opinion, this is actually a conservative estimate. And once again, it's not financial advice. Obviously, don't base your life's investment decisions on this. It doesn't account, though, for potential breakthroughs in AI, robotics, or energy storage. It also doesn't factor in the potential compounding effect of Tesla's share buyback program. And so in conclusion here, the recent dip, today's dip in Tesla stock price, in my opinion, represents a rare opportunity to invest in a company that's not just disrupting an industry, but creating entirely new ones. And as Warren Buffett famously said, be fearful when others are greedy and greedy when others are fearful. Right now, the market is fearful about Tesla. But for those who can see the bigger picture, this fear could present an incredible opportunity. If you found this analysis helpful, give this video a thumbs up and subscribe to the channel. And of course, remember to join us for our live trading training at felixprehn.com/webinar and learn how we're up 80% on our trades so far this year. I thank you for watching, and I look forward to seeing you on the next one. What if I told you that $50,000 could potentially fund your entire retirement? Sounds crazy, right? Well, stick around because we're about to embark here on an exciting journey with 2 big tech stocks, and for the more conservative investors, also with 2 ETFs. And I promise that by the end of this video, you'll understand a